Vincenzo's Gold Crypto Investing, a quick update after a wild ride this morning with the pumps and the dumps in the crypto sphere. I was extremely busy. I didn't get a chance to update you, but our overall technical analysis and thesis on the market is still holding true after you had a phenomenal pump this morning on Bitcoin on this one that doesn't look like much now, but in the moment, people got all excited. It was up about $2,500 and quickly got chopped down again by the moving averages because we have not changed where we believe we're going. I think we're coming down to $42,100. There will be big wicks like what you had right here this morning, but they quickly get sold off with heavy sell pressure, zero to no volume. If you need to get bullish, you got to get above some of this major overhead resistance, this downtrending line, and this downtrending line right there. We'll change the color of one of them to make it noticeably different. So these two, the pink and the blue, you need to get above that and make a run at that 200-day moving average at 56,069 if you want to get bullish. Right now, I'm very bearish, and I think the best overall play is that the price is going to come down and retest that double bottom back here with our drawing tool. That is, I think, where the best play is, where this price is going to eventually trade down to with some big wicks up and down. And it's the same thing across the board. Dogecoin's the same thing. We had a quick little spike up on that. In the 4-hour time frame, it looks like nothing. That's why at Vincenzo's Gold Crypto Investing, we always go from far out time frames and work our way in. And again, if you want to get bullish, Jerome knows this for Dent, you got to get above that 200-day moving average. You got to step up. You got to play the step up game where you get on top of the 50, hold it, jump over the 100, hold it, jump over the 200, back test it, and take off. But nothing's happening like that. I think we're coming down here to retest in Doge. There might be wicks where you go 8%, 10% real quick, but they quickly get sold back off, just like that green one, the second one in, not that red candle, but the green one that's right there, the flash flip wick. When you're in the 4-hour time frame, it looks like nothing. But if you zoom on in here to the 3-minute time frame, you can get fleeced, heisted, and shysted because you get into the middle of this. Where was the pump at? Right here. You get into the middle of this pump and you're thinking you're getting rich, right? You start going in, bam, 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 and then it quickly reverses, right? That's why you always got to be in a 3 or the 4-hour time frame, and it gives you the best idea on what's going on in an overall perspective of the market. Same thing with XRP. It got rejected at 91 cents like Vincenzo's Gold Crypto Investing thought, and now we're going to trade back down to that 77, or like it's probably where it's going to meet is this orange fib circle. Come on, you just clicked it right here, this orange fib circle. I think it's going to come on and hit and meet there at the 76-cent intersection. So we're just going to change this and move it over here. We didn't change the price, we just changed it into the future more, and that lines up beautifully with the fib circle and the overhead support line, or the underneath support line that's there after that rejection off the 91 cents. We had it forecasted there. It actually hit it here. I'm going to watch. I always show my moving and my updates live. I didn't change anything there. I just moved the placement of where it's at, the same as I moved the placement to where this is at now, right? So that's where I think that's going. And then I think ultimately you're not going to be able to hold that in XRP. And unfortunately, if you got bought into that wick and you didn't sell with all this time, I think this is where you're coming down to 60 cents. I think you have to retest. There's too much bearish pressure. If you wanted to get bullish, you got to hop on over just like Doge's moving averages, and you got to get above this 200-day moving average in the 3 or 4-hour time frame. Close above it, then you can start trying to get bullish. Until then, we're ultimate bearish, and I think we're coming down there with big ups and downs within the hour time frame and the 15-minute time frame. But if you're in a 3 or 4-hour time frame, it's going to be consistently looking down, right? Besides a little up and then down, right? But it's going to be down, and that's what's going on in the overall market as we look at XLM too. Another one that's gone all over the place today, but like we said yesterday, we had our target right there. See that? We're going to delete it now because we seen it was failing this 28-cent level mark. We'll put it up here now. It was failing this 28-cent level, and we know the next ring to come down to is this last ring where you flashed wick below it, got supported on it, and then tried to trade back up, but got rejected by the blue and the red, which is the 50 and 100-day moving average. So when we were breaking back around here trying to hold it as support, we said if you slip it, you're coming right down here to the 25-cent level. And then, you know, if you break that, the next underneath ring is way down here into the future where you look for buyers, but on a flash crash it would be right over here, and that's all the way down at 22 cents if you can't hold it. Very close to where this wick went down, right? Almost. We feel that's where this price is going, and that's the best overall trade with what's going on in XLM. going back down and trading to that 22 cents underneath support as the market's very bearish. And if you break that, you got a much greater fall that you need to be more worried about. But that's where we think XLM's going. We feel comfortable and confident with that as we've been playing these ring systems to a T. I feel like we've given you phenomenal technical analysis as we look at a 6 to potentially 18% dump in XRP coming. We've been all over this since we were way back here in XLM, not XRP, where we were telling you how this was topping out, how your upper resistance, we put that target out right here when the price was back here in this little consolidation, and we told you support and then your upper end resistance that if you hit that would have a big flush follow it. And you have, as you've looked into the price, we've went from ring to ring. It doesn't get any better than this when you look at it. You hit the ring, got rejected, traded down to the 200-day moving average, traded over to the blue ring, flush straight down to the 31-cent ring from the 36-cent ring, got bought back up to the 200-day, traded sideways and down, retested the 31-cent ring, failed it, flushed down to the 29-cent, got bought back up, back tested the ring a few times like it likes to do at 31.5 to 32 cents, and then had a huge flush through the 28-cent, 29-cent, or 30-cent, 29, 30-cent ring, 28-cent ring, 26-cent ring, all the way down to the 22-cent ring on a big wick right there, and then got bought back up, right? And then as we move along in the price, it got bought back up from the 22-cent ring all the way up. You can see there's where you back tested that ring and then flushed. Classic back test after a flush down to the 25-cent ring. Look at that. It's classic. That's a classic way for this to move. You get supported on a ring after a flush, come up, back test it, hits the 200-day, one final pump, and then a flush, right? And then you got bought back up from that wick right there all the way through the 26-cent ring, back to the 28-cent ring, rode it, and then pumped off it to the 200-day, and then it forced you down, and then you broke through that 28-cent ring, migrating back to back test the 26-cent ring. Then you could get bought back up a little bit and then flush right back through it, right? So these rings are working beautifully on XLM. Proud of that tech.